Thanks for tuning into the trade setup right here on BQ Prime. I'm Neeraj Shah. And mixed cues, you would have to say, because of the correction that has already happened ahead of the big day today. But first, let's talk about the cues, then some high frequency indicators as well. So the US markets, the Nasdaq bounced back a little bit from the extreme lows of the day, and therefore ended marginally in the green. Down in the S&P margin, I mean, 0.5% in the red. As we speak, the futures are in the green, so, and mildly so. So nothing, no great shakes. Essentially, not too much of a movement. What about the other cues? The dollar index, the CBOE VIX, the 10-year yield. The dollar index is about 105 odd, though the yen slipped against the dollar. CBOE VIX as of 7:30 a.m. These are numbers as of whatever this time, but they would stay true. CBOE VIX marginally lower. The 10-year yield marginally lower again, but at 3.42, it's substantially higher, right? So essentially, everything is hovering around levels which would be worrisome. Frankly, if you look at some of the other high frequency indicators, as I said, the US Treasury yield surged to new highs, marginally off right now, but otherwise near about 3.5. The yen has slid past the 1998 lows as traders brace for more losses. Gold has held near 4-week lows on the Fed rate hike expectations. And the Bitcoin meltdown continues. Yesterday slipped briefly below 21,000. I don't have an exact handle on what the price is right now, but somewhere around that. So that too continues to look slightly wobbly. And as a result of that, I would reckon it's a mixed start, but a flattish with a marginal negative bias for Asia and SGX. SGX will come up on your screen next. But if you look at across the board, most Asian markets slipped in early trade. The SGX Nifty is flattish, 15,726, just about defending that 15,700 levels. Now, remember, I mean, this is the level where we found support multiple times in the past. Would this time be yet another day? Let's wait and watch. Again, if you just look at the advanced decline performance from yesterday's session to not great, maybe slightly better than the previous few days, but 213 advances to 284 declines on the NSE 500. And save for maybe Adani Enterprises, which had a bit of news to itself of Total buying into the Adani New Energy Ventures, or Zomato, which saw actually you saw a downgrade from Macquarie, but nevertheless did okay. We didn't have too many newsmakers doing well. On the other side, a bunch of stocks came off, and even stocks on which there was some news did come off, the likes of GR Infra Projects, for example. But yeah, that's the nature of trade. Fairly thin, not too much of leverage in the market per se, but didn't think that yesterday was a particularly voluminous day for a bunch of stocks which lost out, essentially. That's what I'm trying to say. So the trade setup, I mean, I would presume that the equity markets would likely remain on tenterhooks until the Fed decision and the commentary is out of the way. The key question, viewers, to my mind, is whether the Fed will switch to sharper rate hikes or no. Now, because of that slip from a foreign publication about whether there could be a 75 basis points hike, now everybody believes that there will be a 75 basis point hike. Now, if the Fed does a 50, that will be a positive surprise. A lot of people have allegations that this was an intentional slip in order to prepare the markets for 75 basis points so that there is no major reaction one day immediately post the Fed decision. Be that as it may, I would presume that does the Fed even if the Fed were to switch to or move to a 75 basis points, or rather do a 75 basis points, will it be a switch or will it be a one-off? And I think all of that might probably determine what the markets might do in today's session. Remember, fundamentally, or rather from a quant perspective, a bunch of uh, publications, money managers which manage trading money, long short fund, believe that just from a very near term perspective, maybe the markets could be a bit oversold and could see a bounce. So could a Fed action lead to that short bounce, if you will? Again, I'm the one to say whether it'll be a short or a long bounce, really, but I'm just echoing the views of some people that there could be a short-term bounce back and then a bit of a cool off yet again. So it'll be very interesting to see. Becomes a bit of a tricky zone to trade. If you are not an expert trader, viewers, I would urge don't carry home positions, at least on a day like this. Just sit it out. You can always buy a trend or short a trend if it develops. What about stocks to watch in a session today? Remember, FIs continue to sell, so just keep that in mind. Now, there are not too many newsmakers, therefore, I'm standing on the shoulders of some of the brokerages to try and bring the opinion on some news-making stocks. So, Bajaj Auto yesterday, big decision. They deferred the buyback, right? So, UBS's view is neutral. The target price has been cut marginally. They reduce the volume estimates on weak monthly numbers. They have cut the FY23 export volume growth assumptions for two-wheelers and three-wheelers to about a 5% growth versus 8% earlier. They reduced the FY23 domestic two-wheeler growth forecast, domestic that is, to 14% from 16% earlier, because low current inventories may lead to some demand loss in the ongoing marriage season. The FY23-24 EBITDA estimates therefore are lower by 3% and 5% respectively, which is why I believe the target price has been cut, even though the rating has been maintained. The key is, viewers, as somebody was telling me, the question to ask is, why is there a cash-rich company like Bajaj Auto deferring a buyback? Are they seeing something or some dark clouds on the horizon, as a result of which they want to conserve cash as opposed to distributing it, whether via dividend or via buyback? It's an interesting question, one that uh, should be pondered over. I don't have immediate answers, to be very honest. Then the IPL rights, right? And I think those were the other key uh, things to focus on. So officially got announced yesterday, though it was kind of on the social media that it was Disney and Viacom which won. So UBS has come out with their note. They are neutral on Z with a target price of 350, and on Sun TV they are saying it's a buy. They believe the results are positive for both Z and Sun TV. They had assumed auction price at about 400 billion in estimates for Sun, and therefore they see some upsides following the results. Now, keep in mind, viewers, let's move on to the next note as well, which is MK on Z. And the thing about these rights is that it will benefit Z because okay, let's read the MK note first and then probably just tell you what my summarization is based on my reading of some various notes and talking to people. So MK says that even if Sony Z entities had won the TV digital rights, given the high cost, it would have resulted in a major drag on cash flows, despite the significant revenue boost and digital facelift it would have brought in. They have a buy rating on Z with a target price of 310, underpinned by market share recovery in key GSECs and timely merger. Now, the thing is, viewers, almost everybody is now constructive on Z because they have not paid a whole lot for IPL rights, and the valuations are a lot more supportive than what they were earlier. Everybody's bullish on the revenue accretion and the PAT accretion rather that it brings for a Sun TV, to an extent for United Spirits as well, but predominantly for Sun TV, because if since the rights have gone for 44,000, the annual accrual to each of the team owners, which is Sun TV and United Spirits in this case, is much higher than what was believed to be earlier. And remains to be seen how the street treats uh, TV18 because of Viacom 18 bagging the digital rights. The digital rights have gone in for an equivalent sum to the television rights. That tells you a story about where the digital is moving per se. You are watching me on digital, of course. But the key is it'll be very interesting to see what the net impact on on Viacom 18 could be. Could there be fairly large upfront costs believed to be the case, or can the geo muscle help them really monetize the streaming rights, the streaming benefits from IPL? That's the key question. It'll be very interesting to see how the street reacts to this. Not just today, I mean, over the medium term. So that could be interesting, and that's really the one big newsmaker that's happened in the recent times. ITC is in news. I mean, for the company's market cap to do what it has compared to some of the other high-flying NBFCs as well. Citi says that the company's earnings will grow faster than Indian peers in the near term. Could that be a bit of a catalyst? It's anyways a defensive play, and if it's earnings growth, then maybe something that the street would like. Some other newsmakers, Ajanta Pharma, they've gotten an FDA approval for Topiramate, and ONGC and Oil India. Globally, energy stocks have seen a sell-off as investors are selling their winners, and maybe ONGC earlier, no different, which is why we saw a bit of a sell-off in trade yesterday. Could that sharpen today? That's the key question. Crude marginally lower, if you will. And lastly, viewers, uh, a note on cement from Goldman Sachs, which is analyzed. The reason I bring this is because they analyze both the positives and the key negatives quite well. I think it summarizes everything, and which is why I thought I'll bring it to you before we wrap up. So they are saying that part of the substantial price increases in April will roll back in May, largely due to choppy demand, which means that demand does seem choppy. Their channel checks suggest that. They have seen further rise in fuel costs to the extent of 150 to 200 rupees per ton, sequential increase in Q1 FY23, and they believe the EBITDA per ton will decline sequentially in Q1 FY23. The point is that in the price, because if you look at the cement stocks, they will largely have a one-way move downwards ever since Ultratech announced the preponderance of expansion plans. The positive catalyst, according to Goldman, that they expect the volume growth of 13% in Q1. They believe that the sector is trading at a discount to its long-term median post-correction, which is the point I was saying. Let's move on the plate. Yeah, positive catalyst. Yeah, so they're saying that uh, it's trading at a much better long-term median post-correction, and they believe that any correction in international petcoke or coal prices, a demand normalization, or price increases being successfully enacted could act as near-term positive catalysts for the cement stocks. So, you know, so the fact that it's trading at a discount, and if there are some catalysts that work out, then that could be a positive, simply because the sector is at a discount. So keep that at the back of your mind, viewers. uh, that's it. I think throughout the day today, probably till late evening, everybody will wait for the Fed commentary, and of course, whether it's a 75 basis points or a 50 basis points action from the Fed. So I think that would largely determine what happens in the very short term. So keep one eye out for that. Don't be a braveheart, or don't be try and be a hero. If you're not an expert trader, it might be better off to just hang in there without too many large positions and wait for the event to go by. Thanks so much for tuning in.